everyone. Welcome to another edition of Chart Attack. This is Vishal from EQUITY.GURU, and today we're going to talk about a commodity that's pretty red on the day of recording. You can actually see here, oil is down 5% after the IMF slashes its growth forecasts. Oil's been choppy. Last week we had news that, hey, oil's falling because of the reduced demand in China because of the lockdowns in Shanghai. And then OPEC came out saying, hey, you're not going to be able to make up for oil, Russian oil, supply, which means there's going to be less supply of oil, which means, the supply and demand imbalances are going to shift, I guess, positive towards the OPEC side, which would mean oil prices would have to rise. So a lot of, big geopolitical and macro moves happening on oil, and we'll take a look at what the charts are forecasting or showing. But we are above $100 on the West Texas side and still above $107 on the Brent side. But I think before we look at oil, the big news recently was this huge spike in natural gas, where we hit levels basically not seen since 2008, I believe it was. Yes, 2008. So natural gas hit around $8, levels we haven't seen since 2008, and it's getting people a bit worried, right? Because we are obviously heading to the spring season, and the weather's supposed to get warmer, so maybe it's not going to impact people too much right now. But imagine natural gas prices staying this high come winter and the cold season. We'll find out what happens, especially over in Europe. But well, speaking about Europe, that's basically where a lot of these macro moves for Russian energy is being made. And we just had this article that came out today on April 18th, and it's saying that there's an EU embargo on Russian oil in the works, and it could be unveiled as early as next week. And Zero Hedge here is claiming that, according to JP Morgan and their stats, if such an embargo was to take place on Russian oil next week, it could send oil to $185 a barrel. So when we take a look at the charts, we'll sort of see where that is. But they've, this is all the notes that came out from JP Morgan. And they say here, a full and immediate embargo is likely to hurt European consumers more than Russian producers in the near term. More importantly, a full immediate ban would likely drive Brent crude oil prices to $185 a barrel, as more than 4 million barrels per day of Russian oil supplies would be displaced, with neither room nor time to reroute them to China, India, or other potential substitute buyers. So it's going to get quite dramatic for the oil markets, and that was actually Brent Crude. So it wasn't West Texas Brent Crude, but a lot of the technicals are actually looking very similar on both of the charts, where we've had this very big support zone, which I actually mentioned to our Discord members that we've been watching since last week. And for Brent Crude, we did bounce above that $97 zone, and we are trading at around 106, 105.98 to be exact here. Just to zoom out a bit, if we were going to go to 185 on Brent Crude, as JP Morgan thinks, that would, take us to new all-time record highs on Brent Crude, taking out levels that we've seen actually recently, because Brent Crude, the European version there, has been quite volatile lately. So we're talking about levels that are, even actually this chart doesn't go back to 2008 on Brent Crude, but I do have it on West Texas. So we'll take a look at that actually, because that's probably the one that is going to impact us a lot. But you can see here, we actually are not too far away from record high. So I'm assuming that 185, on Brent Crude, it would actually be a new record high on Brent Crude. And on West Texas, we did see that spike in 2008, just above 147. We are at 103 right now, but I think such a move in Brent Crude, which also, it does impact what happens on the prices of West Texas as well. I think that will feel a bit of the hit as well. And you can see, I've been trading this market. I'm watching a nice triangle pattern that I have drawn out. Same setup, as I said, with that major support zone at around the $96 here on West Texas. And, just on today's close, yesterday's close, we did close just slightly above the trend line that I had drawn out, not what I would consider a major breakout. So it's really about the next few candles. We'll have to see what happens, but there is a chance that that breakout has already happened when you take a look at the futures and the CFDs. And this is today's price action with the minus 5%. And there is now this danger, I guess, well, not danger if you're an oil bull, I guess, for potential retest of this broken trend line, which will then take us into new recent highs for 2022. And who knows, folks, by next week, if all these embargoes are in place, we're not looking at 127.50 on West Texas, right? We're looking at a price level substantially higher, but the technicals, if I'm going to say, putting the fundamentals aside, the technicals are indicating higher oil prices, and how that happens, that's sort of the big mystery with technicals. That sometimes a lot of people do say technicals can forecast these events. So perhaps that's just the market now pricing in embargoes, right, for next week. So what I'm seeing in oil, I'm quite bullish. If you are an investor in the Canadian markets, that's going to be a good thing because our markets here in Canada are heavily skewed, right, towards energy. And if you take a look at the chart of the TSX and the Norwegian markets, which are both heavily oil dependent or have a lot of energy stocks on their indices, were the only markets really to print new record highs in 2022, something we haven't seen on European markets or on the US markets for the year of 2022. And we're only 4 months in, but the TSX has held it. So has the Norwegian OBX market. And for you Canadian investors there, we've been watching this support zone at around 21,800 on the TSX as our retest zone, which it looks like to me has held. Very strong day here on the TSX, and very strong green day here on the TSX. And if oil jumps, not only is the Canadian markets really correlated with oil, but so is the Canadian loonie, which is positively correlated with oil. So we might be seeing some loonie strength. We might be seeing new record highs here on the TSX. And of course, if you are on any of those large oil companies, I would be looking at companies like Chevron and Exxon. They've been doing quite well recently, specifically Chevron, dividend-paying stocks. We know, of course, Warren Buffett himself has been buying up Occidental Petroleum and has been for quite some time. So I think it might be a smart move to get one of these oil companies in your portfolio for the long term. And there's still some more gains here, folks, it looks like, for the energy markets because of geopolitical and this whole macro and I guess geopolitical realignment, if you want to call it that. So big week next week, if this is to be true, if this embargo does take place, and if JP Morgan's analysis at 185 does come true, I think it's going to hurt a lot of us, specifically at the pumps. But I guess the positive news is, hey, these banks like JP Morgan and Goldman Sachs always make predictions, and a lot of them are wrong most of the time. So I guess that's the only light at the end of the tunnel. But I do expect to see higher oil prices just based on technicals. That's it for me, folks. If you enjoyed the video, give it a thumbs up. Be sure to follow Equity Guru at all our social media links in the description box below. Let me know what you guys think of the oil markets. Are you betting on higher prices, or do you think a lot of Western economies or countries, that are dumping their reserves will be enough to bring down the prices of oil back below 100? Give me your thoughts in the comments below. I'm going to be looking forward to read them, and I'll see you guys all in the next chart attack video.